Alright guys, I apologize, but this video is going to be really quick. This is the third time I've tried to make the video tonight. Constant interruptions, and I've had enough. But basically, it was a do-nothing day. NASDAQ down 0.22%. Volume was slightly higher on Telechart, slightly lower on MarketSmith, so it's a scratch. Russell 2000 down 0.01%. It's a scratch. We're just consolidating the gains. S&P 500 was slightly higher. Volumes showing higher on Telechart, lower on MarketSmith. It is a scratch. Dow Jones Industrial Average, same thing, scratch. Overall, we look healthy. We're trending higher. We're waiting for the market to break out up or down. Moving on to individual stocks, QRVO is a full failure on an end-of-day basis. After this big ugly day down here, I put my final sell stop right below these lows. Or I think I put half here, and I put half here, and I was cut out all of the stock. Maybe I did not put it half here. I might have raised it all to right here because I've been out of this for a while. So I do believe I put my final sell stop right here below this low a day. And at the open the next day here on the 26th, I was taken out of all of it. Big intraday reversal kind of pissed me off. But as we went along here, if you then moved your sell stop to here, you were taken out completely on the 9th. If you weren't taken out there on an end-of-day basis, today you're finally taken out on an end-of-day basis. And if that's the case, you now have a small loss instead of a small gain. But either way, QRVO is a full sell. FCB lost its near Max Green Bop catalyst by losing Green Bop completely and selling off almost below my ultimate final sell stop level. It just missed it. It was at 26.50, and now it's at 26.60. Came 6 cents away from hitting it, but now FCB is a full sell, 100%. SKX also is a 25% sell. It already closed below the 20-day moving average here, but the first sell stop is here so far away, so I didn't make a close below the low a day or a move below the low a day as one of my sell stops. But now with it confirming a sell-off below the 20-day moving average and with volume being lower, there's no need to do it on an end-of-day basis. This was one of my sell stop levels, 69.04. That gets raised up now to 69.99, 1 cent below the 70 low of day of today's session. If it crosses there, 25% of SKX has to go. And then, I would remain the rest of it, right here. If it goes below here, we'll be completely out of SKX. If it closes below this level on heavy volume, we might also fully be out of SKX. And then also Pacey, moving below the 50-day moving average, but on lower volume. This stock has been going nowhere for too long of a time now, so now time sell stops start to come in play. So the first sell stop I had was right here, 29.52. It missed it today, but the 29.51 sell stop now gets raised to 30.08, and then the final sell stop will remain right here, 25.27 level, I do believe. But if we break down here on huge volume, I'll probably be done with Pacey, but rules are rules, and we still have over a 50% gain in this stock. So I really don't want to get out of all of it until it does fail this level. But if it starts breaking down below the 50-day moving average on huge volume, I might just get out of the way of the stock now because there's too many stocks trending higher, and this stock's gone on too long going nowhere. So I'd rather be out of it than in it at this point. So Pacey is on watch also. Now moving to new long positions. ATHM is a high quality long signal. This is a CanSlim quality stock and just makes being a perfect speculator scan stock by $1.35. You got to be at least $50 to make the scan. So ATHM qualifies, and it is top of the line perfect speculator scan. There are 73 stocks currently in this scan out of a universe of over 10,000 stocks, and this is one of them. However, if you look at ATHM, this is a choppy son of a bitch. This stock does not like to hold its breakout gains at all. However, recently, it's undergone a flurry of pocket pivot point signals, has a ton of green bop and yellow bop, and no red bop since its lows in February, which is a marked change of character from anywhere from May to March, where red bop and heavy volume sell-offs prevailed. So now we're starting to get some clear accumulation, some better price action, but it's still risky buying breakouts. So since the stock hasn't broken out yet, I do want to get long. But with it being a CanSlim quality long, 2.5, and a perfect speculator 2.5, you think 5% of the account value goes in this. But I'm sorry, friends. When I look at the arithmetic chart, there is no way in hell I would put 5% of my capital without the market breaking out to new highs and the lower volume that we're seeing in the indexes in this stock. So it's going to be a 2.5% long position. And what I recommend doing with ATHM is you have a first hard sell stop on the books at the open, 49.06. We don't want to see it trade below there. And then you can have another hard sell stop at 47.60. If it hits 47.59, you need to be out of all of this. Pretty risky trade, but with only 2.5% of the account capital at risk, with it being canceling perfect speculator. And look at all this huge accumulation since that gap up, held the gap up lows, rallied higher, and there's been no distribution in this stock. I think that we have pretty high odds of success, but anything can happen. It's not great. I don't love this chart at all. If this base was, let's say, a few more weeks longer and that 50-day moving average was closer to price, I would like it a lot more. But as it is, 2.5%. And then SYNT is a CanSlim quality long signal. Excellent move here on huge volume. Held the support, big intraday reversal. At first it eclipsed the lows, then big rally back to beyond where it opened, closing higher on very strong volume with the BOP increasing to a higher green level, throwing a pocket pivot point signal. Excellent long signal. We do not risk much if we're long. Final cut loss level below the low a day, 50.77. Or if you want, you can even use 50.54. Either way, we're cutting hairs here and you don't risk much if you go ahead and use that level. But SYNT is a 2.5% position because it's a CanSlim only stock confirmed in price volume scan. The only stock that was confirmed from CanSlim and price volume scan was XRS. XRS is producing a pocket pivot point signal. I regretted not going along the stock here. I regretted not going along the stock here. I regretted not going along the stock here. And I will probably regret not going along the stock here. So just to keep up on that theme, in case you want to go long, go for it. Once again, my problem is short base. Short base. Should have bought this move back here. Clearly, hindsight investing is absolutely perfect. But that should have really been bought right here. Bottom line, 32.13 is where I'd be in. So that's a consideration. Then IGTE was in CanSlim quality stock scan and price volume BOP surge scan, but it's not above its 10-day moving average, so it's of no interest. It's slightly below it. So SYNT 2.5%, ATHM 2.5%, and then also speculative long position AXM. When it showed up on Max Green BOP scan, just a reminder, it was a long signal given out here on 4.8. However, there were, let me go back to 4.8 so I can see. I had two other speculative stocks I took three that day. Kala, VLTC, and where'd my paper go? Oh, DRRX. All are working so far. None are having any issues. But AXN has also worked since that day, so I clearly should have gone long on 4.8 AXN. I would be in at 170 instead of one to buy here at 2. Now, the problem is that when I looked at this on Max Green BOP scan, I automatically assumed it's going to be in my price volume BOP surge scan. But it had a 208 high a day, and it only picks up stocks that are within 3% of their high a day. So that's only 6 cents. So this stock would have had to have closed at 202 to be part of the price volume BOP surge scan. But then when we look at it another way, if it would have been up another 2 cents, the stock would be up over 10% of the day, meaning that I'd risk at least 10%. As it is, if I'm wrong here, I still risk almost 10%, but I'm only going to lose about 10% on my 1% position if I'm wrong. Whereas on the other one, had I taken it if it was up at 202, I'd be losing about 12, 13, 14, 15% if I use this low a day here. But since it's already at 202, we can use the low a day, and it's not going to be as risky. But bottom line, it's splitting hairs. If it would have closed at 202, it would have been a good confirmation. But it doesn't matter because it's such a risky stock. I'd actually like to see it closing lower since it's already broken out. I mean, all I needed to do was see it be above 197. So even if this thing would have closed at 198, I'm going long because I already got one long signal. Now I'm getting another one. Got to take it. It's only 1% of the account capital. All right, everybody. Aloha.